This is the disclaimer. It is a standard disclaimer. This presentation and what I am sharing is for study and educational purpose only. I am not a SEBI registered, hence no investment advice, no trading calls. Do your own research and take a SEBI registered advisor before investing into share market. I will use some sites which are just for information purpose and educational purpose. There is no intention to promote any website. Okay. Uh, no stock specific query will be dealt in this session because I am not a SEBI registered advisor and I am not authorized to speak on any uh, stock specific query. Okay. You can connect me on Twitter. This is my Twitter handle. You can note down it. Next. What are the learning objective? Friends, if you are with me with your soul for next 2 hours, I will assure you, you will get a different insight about share market and trading in the share market. And if only 2% of the people can change their lives or thoughts with this learning, I will uh, take it as a full achievement of my this delivers. So we will learn the some basics, then approaches to security analysis, then approaches and pillar of fundamental analysis. So we will touch on fundamental analysis as well as technical analysis. Various times we'll listen on theory part. I will touch on practical aspect also, how to select the stock based on fundamental analysis. I will give some example, how to write some query in some website. And then on technical analysis, stock selection based on technical analysis, I designed one strategy which is when to use and how to use that strategy. We will discuss that. Where to enter and exit, which is most important in the share market. We will discuss that based on technical analysis. And if time permits, maybe I will cover this also, portfolio sizing and risk management, because this is a very important aspect. And lastly, there will be question and answer session. So I request all of you to note down your queries and ask all these queries at the end in the question and answer session. Is it good? Shall we go ahead? Good to go? Yes, no?
Yes, sir.
Okay. So let's move forward. How can you trade in stock market? See, there are two things. One, you can trade in index or you can trade in equity stocks. The pen mark is clear. Yeah, it is a pink color. Yes, no. Are you getting the pen mark?
No, sir.
Ticks. Yeah, okay, thank you. So index trading and equity. Equity stock trading is very simple. You have to just buy the stocks, keep it in your portfolio, and sell them when your target achieves or the stop loss hits, whichever is earlier. In index trading, there are two options. One is future and second is option. You can buy the future or short sell the future and then recover, or first buy and then later on sell the future. In option, you can buy index option or sell index option and stock options which are in F&O segment. So either you can sell them first and then buy, or buy and later on sell. These two types are there. Then before doing all these things, first identify Who are you? It is very, very, very important. If you are a scalper, you are looking for intraday trades or a 2 3 days trade. When what scalper does, if the market is going up, yeah, he enters here and exits here or here as per his risk reward ratio. If the market is going down, it may be intraday or 2 to 3 days. He short sells here and covers his position here. He don't want to catch the bottoms and tops. Swing trader, he takes the position based on his view on the market or stock for 3 to 7 to 10 days. Yeah. And positional trader or positional short term investor, he takes a view for 15 to 30 days. Then short term trader, he may stand in a position for 1 month to 24 months, and medium to long term traders who makes a huge money in the equity market, their view is around 24 months and more. So first of all, identify who you are. If suppose you are an intraday trader, you entered in a position, if that is going into loss, sorry, bear with my voice, because due to rain and all these things, the atmosphere at Nasik is not very good, and I am I am having some cough problem. So, with all your permission, I'm going ahead. So, if you are an intraday or swing trader, if you entered in a position, before entering into the position, first define your risk, and based on your risk, define the stop loss. If the stop loss hits, then exit from the position and do not forcefully become a long term investor in that security. Next is the approaches to security market. There are two approaches. One is fundamental and second in technical
नहीं आ
analysis.
रहा रिकॉर्ड हुआ
Sorry, yeah, someone saying nahi aa raha hai. What is that? My presentation is visible.
Visible.
Okay, yeah. So fundamental analysis, it talks about the fundamental factor. It takes care of the fundamental factor, and which fundamental factors, which are affect the risk return characteristics of the security. And technical analysis, it considers the demand and supply ratio of the security and prevailing trend of the market or the security, and based on that the decisions are taken. So these are the three pillars of fundamental analysis. So first we'll cover some part of fundamental analysis, then we will shift to technical analysis. There are two approaches in fundamental analysis. One is bottom-up approach, second is top-down approach. Factors are same, but thinking process or analysis process is exactly in the reverse way. In bottom-up approach, first you identify the companies, then you look at the sector, whether the sector is in boom or not, and then you look at the overall economic condition. And in top-down approach, first you see the economies, how the economy of the country, how the economy of the world is going forward. Then you look at the sectors within those economies, and then from those sector you identify the companies. Then while doing the economic analysis, what we see, if we see at the Indian economy, we will first look at the GDP growth rate, how is our GDP is growing, then the trade deficits, These are some parts. This is not a exhaustive list. These are some examples. Then inflation rate, exchange rate movement. Currently, it is very popular. A lot of people are talking about USD INR rate, USD GPY rate, and dollar index. Then India's balance of payment, how it is set, whether we are net surplus or net deficit is there in balance of payment. Then budget and sector-wise allocation of that budget. This is very important factor because based on this, long-term investor may take his decision which sector is uh, getting more allocation in budget. From that, then select the companies. Then if we move to the global economy, there is a saying that all major indices should move in one direction. See, if our index is moving in this direction, the global indices also should move in this direction. If suppose global indices are going down and our indices are going up, then there may be a decoupling for some part of the time. Ultimately, all the indices should move in same direction, either upside or downside or in sideways. So we look at US economy because US market are said to be Dow market is the mother of all stock markets. So check what US markets are doing. How is the volatility in US market? Based on that, our market will also get some effect. Suppose if US market is uh, suffering from fever, our markets will get at least a cold, either not fever, but at least we will have some cold. Then check the world economic outlook, whether for the long term or a medium term. If the world economic outlook is positive, then stock market move in positive direction. Check bond yields. Currently, it is very popular topic. Bond yield, short-term bond yield, long-term bond yield. If short-term bond yields are higher than long-term bond yields, then there may be some problem in the short term. Then look at whether there is any financial crisis is coming. Is there any war or war-like situation like we seen the Ukraine-Russia war or earlier the Gulf War? Then is there any pandemic? Then in such situation, there might be chances that in short term there will be some panic in the market. Then, yeah, can you mute yourself, please? I'm getting some disturbance, and due to that, I'm the my link is getting break. Yeah, thank you very much for the understanding. So now going forward in this fundamental analysis, we do the industry and sector analysis. What to do in that? Check whether where the industry is or the sector is placed based on the industry life cycle. In the initial stage, this is the revenue growth, and this is the how the time will take. In the introduction stage, the revenue will be less. In the growth stage, the revenue will get increased, but it will take some time also. And in maturity stage, the revenue, the profits, all these things will be at its peak. And in declining stage, it will slowly go downside. So what the fundamental analysis says, pick the stock in the growth stage, means at this level or this level or this level, you pick the stock and exit the stock when the decline stage start. When you can't, you may not capture the decline stage here, but you may capture here, you may capture here. Suppose you, this is revenue, as well as suppose this is the price chart. You have entered here and you are exiting here. You are made a handsome amount of profit. Don't, if you have entered here, then don't wait the price to come here and then exit. When there are signals, it is going down. At that time, at least book partial profit and then wait whether there will there uh, there will be some up move or not. Then going forward, in fundamental analysis, we have to do company analysis. While doing the company analysis, what you have to see, first of all, check what is the market share of the company. Then what is the growth potential of the company. Then see the culture of the company. If all these three things are in line,
Wait, പെട്ടെന്ന് fade slowly.
then check what are the goals of the company: short term goals, medium term goals, and long term goals. These all things you can get from the uh, annual report published by the company. Check the current annual report, check the past annual reports also, and check whether the management is going on the way what they are talking or not. Yeah, because that will a good indicator of identifying the strength of the management. After doing this, then do the SWOT analysis. Check the strength of that company, weakness of that company, what are the future opportunities of the company, and what are the threats in that business segment. And based on all these, select the company. There are some famous quotes of Warren Buffett. Should you find yourself in a chronically leaking boat, energy devoted to changing the vessel is likely to be more productive than energy devoted to pitching the leaks. Means if suppose you are traveling in a boat, if it has got some holes, then change your boat, shift to another boat, because if you are trying to patch up these holes, how many holes you can patch up before the water comes into the boat and you survive. Price is what you pay and value is what you get. Then in the value is what you get. Value means what intrinsic value you are getting, that comes here. Then if we see the intrinsic value, based on intrinsic value, where to buy, where to sell the share, where to enter and where to exit. In that case, what is intrinsic value? The price a rational investor is willing to pay for an investment, giving it risk, giving its level of risk. So if you are decided to enter into stock market, there are always risks, single risk or multiple risk. So considering all these risks or risks, what value you are getting in that. So if suppose this dotted line is the intrinsic value of a particular security, and this blue line, this is a market price, current market price. So if, and what fundamental analysis says, if the market price is greater than the intrinsic value, then the security is overpriced. If the market value is underpriced, market value is lower than the intrinsic value, the security is underpriced. So based on this, you can take the decision. What is the general rule of decision taking? Yeah, can you please mute yourself? I am getting some disturbance. Thank you.
कहीं वहाँ ठीक है जान दे
Moderator, can you please check whose mic is on? Please mute all the other persons except me. So, what is the general decision, general rule? How to decide when to buy a security or when to sell the security? If intrinsic value is greater than market price, means market price is here and intrinsic value is here. So the intrinsic value is greater than the market price at this time, buy the security here. If intrinsic value is less than market price, sell the security. Means here you can sell the security. If you bought here, here you can sell the security, or here you can short sell the security and cover it when it comes, market price comes down. When intrinsic value is equal to market price, you need not have to take any action. No action is also a good action various times in the stock market. Then these are some points of quantitative checks, key ratios. Many of you are aware about all these ratios: working capital ratio, debt to equity ratio, interest coverage ratio, current ratio and quick ratio, operating profit margin ratio, asset turnover ratio, then EV by EBITDA, return on equity, return on capital employed, ROE, ROC, earning per share, price to earning ratio, then price to book ratio, price earning growth ratio. We will discuss on price earning growth ratio, debt to equity ratio, and interest coverage ratio in next slides. Other ratios I am skipping, and some part of this promoter holding pledge, this will be covered in next slides. What is the market cap to sales, then profit growth, sales growth. These are some of the ratios which you have to check before going uh, to enter in a security according to the fundamental analysis. The list is not exhaustive. This is a sample list. Yeah. Now, why I okay, debt to equity ratio and interest coverage ratio. According to fundamental analysis, if suppose the debt to equity ratio is less than 1, then or less than 0.7, then that company is good for investment. If debt to equity ratio is less than 0.7, then it is a good for investment. If it is greater than 1, then avoid these companies. But simultaneously, if you check the interest coverage ratio, and when you check this interest coverage ratio, when debt to equity ratio is greater than 1, at that time, check the interest coverage ratio. Normally, what is said, higher the interest coverage ratio, better the security, because it has the capability to pay out its interest as well as debt from the earnings of the company. In general, people says that interest coverage ratio greater than 2 is good enough, but particularly I take this as if it is greater than 5, then good to invest in that company. Then next, price earning growth ratio. This is very much neglected ratio in the analysis. Yeah, very few people, hardcore analysts, they analyze this. In general public, they even do not know about PEG ratio. What this ratio defines: price to earning, the price to earning growth ratio. How it is calculated? Formula is PE ratio divided by earning growth ratio. PEG ratio refers to the stock valuation method based on growth potential of the company's earning. Now, whether earning growth ratio is to be taken of current earnings or past earnings or forward earning. Instead of trailing PEG ratio, go and check the forward PEG ratio, which is determined based on the annualized future growth rate for a certain period, usually up to 5 years. So that will give you a good idea what the company will do in future. Going forward, yeah, can we assess? Can we determine the intrinsic value of a company easily? No, because as a retail investor, we don't have that much information with us, or if we ask to the management, वो हमको दरवाजे में भी खड़ा नहीं करेंगे, तो बोलेंगे चल भाई तू निकल. So then what is the alternative? I take the Graham number as an alternative to intrinsic value. How it is calculated? Benjamin Graham, he has done a lot of research and he added on one formula. He is recognized as the father of value investing. If you are a value investor, not a trader, yeah, if you are a value investor, then check whether the current market price is less than the Graham number of that security, and that company is in growing sector which is supported by the economic growth or our budget allocation. Then at an appropriate technical level, enter in that security and sit on it tightly. Now, how Mr. Graham has defined this formula? This formula is square root of 22.5 is a multiplying factor multiplied by earning per share into book value. If you take the product of these and then take the square root of these, you will get the Graham formula. And based on that, instead of in place of intrinsic value, you can use this and take your decision. Then I use one website, screener.in. If possible, I will show you this website. What is visible on the screen? Is it screener.in or my presentation?
Your presentation.
Only presentation. So I will stop sharing that and I will start sharing. Uh, uh, Now what is on the screen? Screener? Yes.
Yes.
Yeah. In screener.in, if I take an example, uh, this query I have given you in presentation, if suppose I check this, so you can get all this ratio here. which we have discussed. From that, lot of ratio you can get here on this tab. Yeah, forget about the what is the company name and all these
हाँ
things.
कहीं
Boss, can
श्रीखंड
you mute
श्रीखंड
yourself, please? You are audible to all the public. You are talking on phone. So these first three rows, these are by default, and other ratios you can add by going here, edit ratio, and from these various options, you can select the ratios as per your understanding, as per your analysis, and you can save them as save quick ratios. Yeah. So now I'm going back to my presentation. See, I think in team we cannot share multiple tabs. Yeah. Now I'm back to presentation. Okay. So these three rows, these are by default on screener.in. Yeah, three rows are by default, and you can have total 27 rows. So you can add, sorry, 27 ratios in this screen. So you can add additional 18 ratios. How to add this ratio? By this edit ratio button I showed you. So with theory, we are going with practical. So this website is useful for that. There are other websites also, but I prefer this one. It is not a promotion. You can have other websites also. You can get all this ratio on money control. You can get this ratio on ET, Economics Times, and Trendline, and various websites are there. Some are paid websites, some are free website. This website is free, so I preferably use this website because the developer of these websites are chartered accountants who are in stock market with their father, who are in the analysis from their school times. So if you read about that website, then you will get all these details. Then at least what ratio you have checked that I have given. So after adding this ratio, you will get such type of screen, and here you can get the about key point. I am again going back to that website. See, now it is clear. Yeah, it is more visible other than the as compared to the presentation. See, I select this is my standard uh, analysis tool. Yeah, I check prima facie these ratio. If these are good, then I will go ahead. With that, you get here the about of the company in brief, what the company is doing, key points of the company. You can expand this to read more and get the detailed information. So, but the more information you will get on the uh, if you go here in documents on the financial annual reports, you will get the more information in the credit ratings and all these things. So coming back to presentation. So these are the sample ratios. Now I'm back to presentation. Then what should be? PE ratio should be or preferably lower than the sector average. Then price to book value, that should be or preferably lower than the sector average. Sometimes if the company is in good growth, so you will not find the PE ratio and the price to book value ratio lower than the sector average. Yeah, you have to pay some additional premium for the growth story and buy those at higher valuation also. So, and you check the sales growth, profit growth, return on equity for 1 year, 3 year, 5 year, return on capital employed, ROCE, return on invested capital, ROIC. For 1 year or 3 year, it is, if it is greater than 15, it is said good. If at least it should be 15. If greater than 15, it is good. Debt to equity ratio, lower the better. If debt to equity ratio is nil, then that is very good. And suppose if debt to equity ratio is nil, and the company is continuously investing in its capacity expansion, then that will be very good, because the company might be taking very minimal borrowings from outside and using its internal accruals for capacity expansion. Then pledge by promoter. Exceptional cases are some there: telecom, banking, and some other uh, industries in which heavy investments are required. So those are the exceptional cases, and this should be, or as far as possible, this should be nil or less than 30% is acceptable. So if you go to this query, I had written this query especially to explain you. The price to earning ratio is less than 10. EV by EBITDA is less than 7. EV by EBITDA is, if less than 10, that is a good sign. EV by EBITDA should be greater than 0. It should not be negative. If it is negative, then there is some problem with the company. Price to book value is less than 2. Market capitalization is less than 1000. I selected here less than 1000 because more than 1000 you go into the companies which are not small caps. Then debt to equity ratio is less than 1, and return on capital employed is greater than 15. Return on capital employed is less than 40. Return on equity is greater than 10. Promoter holding is greater than 40. As far as possible, it should be greater than 40. And if it is greater than 50, it is good. If it is greater than 75, then there might be some problem. Yeah, because they then the as per SEBI rules, the promoters has to dilute their holding up to 75%. Yeah, and if the promoter holding is greater than 75, then there are more chances of price manipulation in the market. Dividend payout ratio, as far as possible, it should be greater than 5%, and price to free cash flow, it should be less than 20. So you are not giving price to uh, free cash flow multiple of more than 20. Then interest coverage ratio should be greater than 5. In this presentation, the path of this query is given here. I am going back to this query again. See how to write this query. Go to this website screener.in, go to the screens here, create new query. In that you can type this, just debt to equity ratio is less than 1. If you run this, you will get a list of 3040 companies. Then again go to here, add a word here, and this is syntax. So and or you can use here, and interest coverage ratio or interest coverage is greater than 5. Now the 3000 company, that earlier the result was more than 3000 companies, now the result is coming to 1378 companies. Likewise, uh, this is the query which I shared with you. Write down like this: So you will get the result and uh, finally run the query. You will get the list. Then analyze these companies based on fundamental analysis. So again, going to presentation. Can I share multiple tabs simultaneously? Not allowed. So okay,
Sir, click on share screen.
share screen.
So there, any tab you go, we will be able to see.
No, but I am not able to select multiple tabs here. Okay, we will go by this one by one. Whenever want to switch to some website, I will go to that tab and back to presentation. So now presentation is visible. Yes. So based on this, you can select the companies on fundamental analysis. So is it a good value addition based on fundamental analysis? Say yes, no.
Yes, sir.
Okay. So see, the fundamental analysis is a very deep subject. I explained you only the ratios which are more useful in day in day out investing decision. So next to coming to technical analysis. What is technical analysis? It is all about charts and charts. Technical analysis don't check the fundamental analysis as far as possible. वो कब चेक करते हैं? If the price is going down, then they ask to the fundamental analysis. अरे बॉस थोड़ा चेक करना इसके फंडामेंटल तो सही है ना स्टॉक बहुत टूट रहा है I think there are some participants from South India. They are also understand Hindi. I'm not using Hindi that much. So it is all about technical analysis is all about charts and charts. What the technical analysis do? He do the price action analysis. He does the volume analysis, and he does the time analysis. Based on these three factors, he decides enter where to enter in a security, where to go long or go short based on that analysis, and simultaneously the technical analysis check the indices or sectorial charts. He also check along with that security, so that if the sector indices is bullish, then you can go long in the strong securities in that sector based on the technical analysis. If suppose that index or sector indices is showing weakness, you can select the weakest stock from that sector and go short and then square up your position afterwards based on your decision. Now, how to read the candlestick? Many of you knows this, but just for explanation, if the candle is red, means the open is at upside and close is at downside. High and low is the highest point of that candle and low is the lowest point of that candle. And this open to close, that is called as body of the candle. If the candle is bullish, means uh, open is low and close is high, then it is a bullish candle. If open is high and close is low, then it is a bearish candle. This is lower shadow and this is upper shadow of the candle. So when you do the technical analysis, read the book on candlestick patterns. That will help you to identify various candlesticks patterns, and based on you can take the decision how the patterns are forming. Now, what is the current trend? This chart is of last week, last Saturday. This chart is of Nifty 50, and if I see here, from 2006 to 2008, market has gone up, and many of us we know from here there was a fall in the market, and again the market was going up, then some sideways, and again it was move on zigzag, zigzag, and this is the COVID fall, and thereafter again market has gone up, and now it is in a sideways zone. But overall long-term trend is this is a uptrend. It is not a downtrend. And India growth story is going up and up and up. So based on that, you can take the decision. So in the market, there are three types of trend. One is bullish trend. Bullish trend means this market is going up, up, up. If we Second is bearish trend. If we see for a short term period here, this was a bearish trend. And third trend is sideways, which is we are currently facing from last 1 year. Broader market is just going up and down and up and down. It is within a range of 18,800 to 15,200. This is the broader range. Within that, the market is moving at present. Then we can identify a broader trend based on this chart, then follow the trend, then check the weekly trends, which sector is in boom, yeah, which sector is moving forward, which sector is down, and based on you can select the security for going long or going short, or the broader indices. Check the sectoral momentum. If momentum is bullish, long the strongest stock in that sector. If the momentum is bearish, short the weakest stock in that sector. Always ride the strongest uh, strongest security from that sector. Yeah, if you are taking a long position, and if you are taking a bearish position or short position, then check for the weakest stock from that sector. Then common tools are indicators. I am not discussing this in detail, but these are some common tools and indicators. One is moving average, second is Bollinger Band. If you read one book is there on moving averages, 101 moving averages. Lot of information is given in that book, and that is very small book. So those who want to take this as a career, they may read all these books. I had given a list of some books at the end. Then Bollinger Band, John Bollinger, who has written these books, he explained all the theory of Bollinger Band. Basically, Bollinger Band, it indicates the volatility of the stock, and moving averages, they are showing you whether the slope of the price is in increasing trend or decreasing trend. Then again in moving averages, there are simple moving average and exponential moving average. If you are a short-term trader, then use exponential moving average. If you are a long-term investor, then go for simple moving average. There are other moving averages also, weighted, volume weighted. Based on your trade, you can choose the moving averages. Excuse me. So another indicator is RSI, relative strength index, which shows you how the stock is placed. Then MACD, moving averages, convergence, divergence. It take three moving averages. Uh, it considers three moving averages while deciding. Then you can use trend lines. You can use patterns. You can use Fibonacci retracement ratios. These are the some pattern formation. If suppose there is a downtrend and a hammer or hammer like candle is placed at the downtrend, then there are chances of trend reversal. This is hanging man. It is also a hammer, but it is placed at the uptrend. Then there are chances of reversal of that trend. This is bullish engulfing. Engulfing candle means I will zoom in this. Sorry. This candle is engulfing this whole candle's body and wicks. That is bullish engulfing. And bearish engulfing is exactly opposite of that. So study such patterns: morning star, evening star. This is bullish, this is bearish. Morning doji star, this is bullish, and evening doji star, this is bearish. So these are trend reversal signals. If you read the book on candlesticks, you can find various candlesticks pattern on those. These are other patterns. This is pennant. If suppose after the flag the pennant is formed and the price is breaking the upper channel, then this is a bullish sign. If the price is breaking the lower channel, then that is a bearish sign. There was one movie in which there was a famous dialogue, W के नीचे बहुत पैसा है. क्या? कौन सा था मूवी? धमाल. So in pattern also there is one pattern which is double bottom pattern. What it suggests? Price is coming down, going up, coming down, either at this level or to some extent lower or upper this level, and then again reversing. And when this pattern completes, then you can take the target from this neckline to the bottom to upside in around 50 to 70% of time of formation of this pattern. This is double top pattern, which is bearish signal. Double bottom is bullish. Diamond pattern, price is moving in one direction. If it breaks in the upper side, then it is a bullish sign, and if goes on into downside, then it is a bearish pattern. Livermore Seneca. Then this one is also very famous, head and shoulder. If this is a one shoulder, if you consider this is as a man, this is a head, this is right shoulder, this is left shoulder. If price going here, gone to the right shoulder, go to the neck and again go to head, then again go to the neckline and go to left shoulder and then coming down. As soon as this pattern forms, the neckline breaks, there are more chances that the price will go down step by step, first to the shoulder level and then after some retracement to the head level in downside. And this is inverted head and shoulder pattern, which acts exactly opposite from of head and shoulder. So if price is moving upside, if price level breaks this the neckline and it is moving up, then ultimate target will be, first target will be shoulder, then after some retracement second target should be the head. This is cup and handle pattern, inverted cup and handle pattern. So you have to study these patterns. And one thing very important, remember, wait for the opportunity. Okay, wait for the opportunity. When the pattern breaks and gives you a signal, or after completion of the pattern, when you get a confirmation candle, at the time enter into that security. Either it may be in upside, either it may be in downside. Based on the breakout, you can take the decision. Never FOMO or panic trade. FOMO is feeling of missed out, and panic trade. So never go in FOMO trade, never go in panic trade. Set stop losses. Why stop loss is important? It protects your capital from a significant drawdown or erosion of capital. See, in accountancy, ROC is return on capital. In share market, ROC is termed as return on capital. Not return on capital, but return of capital. In equity market, return on capital is more, return of capital, return of capital. This is more important than return on capital. If there is a capital, then there is a capital market for you. If there is no capital, then there is no capital market for you. Trade with affordable risk. Security market is always coupled with various risk. So inadvertently there is risk. So you have to define what is your risk appetite level. According to that, you place your stop loss in system. If time permits, we will discuss on that also. Take into account indicators and other studies along with these patterns. This is simple chart. If you're taking a decision based on the moving average crossover, crossover means here is a longer period moving average is this, and a shorter period moving average is crossing over like this. This is the crossover. Say this is the 7-day moving average, this is the 20-day moving average, or this is the 7-week moving average, this is a 20-week moving average. Based on that, how to take decisions. This is a simple strategy, and simple strategies also can make a good money for a disciplined trader. Remember the word disciplined trader. Yeah, you have to follow your discipline, you have to follow your stop losses, you have to follow your targets. See, target is not in our hand, but stop loss is in our hand. So if stop loss breaks, then exit from that position and protect your capital. We will discuss this in more detail in risk management. So if you are taking decision based on daily moving average crossover, 7-day moving average crossover, crossing over 20-day moving average, or 50-day moving average crossing over 200-day moving average, which is also called as a golden crossover. When to enter? On the day of crossover or on next confirmation. Suppose the price is here at this level. See, this price is at this level and moving average, higher moving average and lower moving average cross the higher moving average, say on the day here. So price is here. There might be some retracement after this crossing. So check for the confirmation candle, how the price has moved on the second day, whether it is a bullish, bearish, and after taking the support, if suppose the price again going up, then on this confirmation candle, you can take that entry, or you can take the entry at this crossover day and place a stop loss as per your risk appetite below this price, below this crossover. Yeah, it may be 2%, 5% as per your risk appetite. Then Bollinger Band, I will show one example of Bollinger Band. For that, I have to go to some website. Please allow me some time to open some chart. So Bollinger Band is a band which is defined by John Bollinger, which gives you upper limit, lower limit, and middle limit. How it looks like.
Ganjam sir, if you're sharing chart,
Just a minute, just a minute. I am going
yeah,
to the chart. Yeah, I am still on presentation. I have not shared the site. See, whatever I am showing, take this as a learning. It is not a trading call or anything. Yeah. Now I go and share one chart. See, now chart is visible.
yes sir.
Yeah. So this is a Bollinger Band. I will hide all other things. Uh, I will hide these moving averages from this chart. I will hide volume. I will keep this Bollinger Band on this chart. So this line is the upper Bollinger Band. This is upper Bollinger Band. This is lower Bollinger Band, and this is middle Bollinger Band. Based on this, you can define your strategy. If suppose you are a positional trader, so you can check if the price, this is a reversal pattern as per candlestick. Yeah, price going down and going up, whatever the name of that pattern. If suppose the price closed below the lower Bollinger Band and again on next day on confirmation candle the price is closing within the Bollinger Band, yeah, above the lower Bollinger Band, go and take the trade. Your stop loss will be low of this candle. What is the low of this candle? That will be your stop loss. With that stop loss you can enter in this stock, whatever the name may be. Yeah, understand the uh, trading style, and your first target should be or might be the middle Bollinger Band. If price sustains above this middle Bollinger Band, then there are chances that the price may touch to the upper Bollinger Band. If suppose instead of this you have taken the entry here and price reverses here and it was walking through the lower Bollinger Band, then exit from that stock, like here suppose. it has gone here after this pattern. It was walking through the lower Bollinger Band. In such a situation, don't remain in this stock if you are a very short term swing or positional trader. See again, now we can check here. The price has closed below lower Bollinger Band. On confirmation candle, it has closed within the above lower Bollinger Band, and it was moving up. After breaking this middle Bollinger Band, the price moved to upper Bollinger Band. Here, upper Bollinger Band can be the resistance, and from that price gone down, taken a support of middle Bollinger Band, and again touched the upper Bollinger Band, then again taken the resistance. Likewise, this strategy you can define based on the Bollinger Bands. If suppose I take a weekly chart, any question? Uh, if we if you are a long term investor, yeah, and you are looking at the weekly chart, you are looking at the weekly chart. Forget about the name of the company, yeah. This is just for an example to understand the theory. Price gone down, closed below lower Bollinger Band, then on next weekly candle, price closed within the Bollinger Band, means above the lower Bollinger Band, and there was a confirmation candle in next week. So enter in this candle with a stop loss of lower of low of this candle, this green candle. If we follow this strategy, whether we have got whether our stop loss triggered anywhere, no. The stock is going up, 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 up. So you can define this. This is one strategy. So instead of just taking a theoretical knowledge, we are discussing some practical situations also. How to define the strategy. So this price was of April 2020. Low price was 280. This is now standing at 1700.
Hello.
If suppose a long-term investor has entered here, but the situation was very difficult there because this was a COVID fall, and at the time the sentiments were purely changed. And if you see here, here was a breakout, here was a pattern like a rounding bottom or cup and handle. You can consider this as a cup, and this is a handle. On this confirmation candle or after retracement, yeah, this is a breakout, the breakout failed, and again it has gone up. So after forming this uh, uh, pattern, after retracement, you can enter in the stock and ride it uh, as per your risk appetite. Good to go ahead. Yeah, coming back to presentation again. So this strategy was based on moving averages. Sorry, this was based on moving averages. This is based on Bollinger Band. This is based on moving averages crossover weekly. We will take that example again based on moving averages. So this is a weekly chart. Now instead of this, you are a long-term investor. We have discussed one strategy of golden crossover. So for long-term investor, instead of daily chart, weekly chart will be much better. So in the weekly chart, if you see the golden crossover here, that will a better opportunity as compared to the earlier one. So what was the price uh, here on the crossing day? It was at 857 on this weekly close, and this was the confirmation candle for you. So if you take entry on this confirmation candle at highest point, suppose 925, and you place the uh, stop loss at 821, whether the stop loss triggered? No. For long term investor, it was going up, up, up. So based on such strategies, you can make a good money. Now I am coming to daily chart. If you are a positional trader, and now I will insert moving average 7 and 20 instead of, yeah, this is your chart. Here 7-day moving average cross the 20-day moving average. I will remove this breakout line. So on the confirmation candle, you can enter here with a stop loss below this entry point and write this. कब तक राइड करना है? Until the price doesn't break the 20-day moving average, or it doesn't it gives three red candles. Yeah, but in that case the open should be lower than this first red candle. If the price formation is making lower high and lower low, and it is a three red candle, at that time you can exit from that stock. So suppose based on this strategy, if we entered here, see highest point is 130 and stop loss is lowest point of this candle is 989. Whether your stop loss triggered here? No. From 1030, you could have ride this up to this close of 1185. Good amount of profit. How to measure the profit here? I say I was entered here and exited here. 8% I earned here. Then again I will wait for opportunity. Here it has given again, no, here not a breakout. Here the moving average gone above. Here there was a breakout, but that breakout failed. Then again it has given a breakout here. If I enter here on his confirmation candle, and this is not 3 crore but red candle, but not going down, price is in a range, and here this price broken the, not close below the 20-day moving average, so I can still stay in that trade, and here I can exit from that trade. Yeah, entry point was here and exit point was here. So based on this strategy, if I check what is the profit, 18% profit in 35 trading days. Good one? Yes. So these are some examples. Same way you can check 7-day, 50-day, 20-day, 50-day strategy. Here the 20-day moving average crossed over the 50-day moving average. I will wait for confirmation candle. I couldn't get a confirmation candle till here. Here I got the confirmation candle because the close was uh, above this close, and suppose I enter at the last moment on this day in this candle with a stop loss of low of this candle, then I will exit here. So what is the profit here? I am entering here, yes, and exiting here. So within 23 days I got a profit of 9%. Is it visible? This one, 9% profit, 23 bars, and it took total 31 days to achieve that profit. So likewise you can define the strategy. Now going back to the presentation again, I hope this is a, yeah, back to presentation, a good value addition to you, the strategies. Then now the question comes, how can I check whether when the price is crossing? So either you have to take out time from your schedule and check charts on daily or weekly basis, और मेरे जैसा आलसी आदमी, the lazy person like me, what he will do, he will make a scanner and he will run the strategies over the scanner, and that scanner will give him result. So this is one another free website which is I am using. So what this scanner is saying, weekly 7 moving average crossing over weekly 20 moving average. Latest close is greater than 50 rupees. Latest close is greater than latest SMA, means simple moving average, close 200. Means what I am assuring here, कि current price should be greater than 200-day simple moving average price. So that will give a strength to my stock. Then I am also considering here volume, which we had not discussed earlier. Volume is greater than last 14 days simple volume into 2. So what is this defines? What is the last 14 days simple average volume multiply by 2 if that volume is crossing by the current candle volume candle, then here I am using pass all the condition in cash segment. I am not going for F&O segment. See, so if all these conditions are satisfied, then the scanner will give me a signal. So here volume I have considered, price I have considered, about 200 day 200 day moving average I am considered, weekly 7 is crossing over weekly 20, then MACD histogram. This will give me how much torque I have used to ride the stock, and that should be greater than 0. Then that is already giving me one strength. Then I am checking here monthly RSI is greater than latest RSI, because what is called monthly RSI is grandfather, or monthly chart. If you say monthly chart, monthly RSI, monthly RSI is grandfather, weekly RSI is father, and daily RSI is child. So if suppose the child is wandering here, and the grandfather is here, father is here, either father or the grandfather will pull that child towards them. They don't allow the child to wander anywhere. Likewise, the monthly RSI or weekly RSI, if suppose the daily RSI is here, weekly RSI is here, this is the weekly RSI, then the weekly RSI will pull down the daily RSI towards it. So that will be a risk. If suppose this is weekly RSI and this is daily RSI, this weekly RSI will pull this daily RSI towards it, so the stock will go up. Remember this concept, and based on that, I have chosen monthly RSI should be greater than daily RSI, so that the stock will have an invisible advantage of going up. Then this is a relative strength. How to calculate the relative strength? I am calculating the relative strength of the same stock as compared to its 55 days price and 20 days ago price. So latest close minus 50 day ago close divided by 55 day ago close into 100, that should be greater than 0. Means whatever price was before 55 days ago, the current price should be greater than this. Here I am using the condition any. Here I used all. So all these conditions plus any one of these two conditions. So either the 55-day relative strength should be greater than 0, or the 20-day relative strength should be greater than 0. Then this scanner will give me stock. Let, let's run the scanner and check the results. Currently there is no any stock, but remember, mark my words, currently the market is in sideways to downtrend. After some correction in the broader market, when market will start moving up, then there will be stocks which will appear in this scanner, and at that time check the fundamentals also along with the technicals and enter in those stock for value buying. If I see here, there was power grid on 27th February. This was coming in the back days, and here I think Triveni turbine is this on 28th February. For that, I have to check first. I have to check weekly chart. 28th February was falling in this candle. Yeah, here if you see the weekly 7 moving average was crossed weekly 20 moving average. If I take the entry on this confirmation candle and I put the stop loss below this, then I can ride this stock. Here it was a big correction of 11% on weekly chart, but we'll take the entry based on this signal on daily chart. So I will go to daily chart of this stock, go to 6 month daily. Now check 28th February, which is given me a weakness signal. So this is the stock entry date. I will place stop loss either 5% below this or the 20-day or 50-day moving average of this stock. So I entered here, then I will ride if I am a long-term investor, because I am entering on the basis of weekly signal, then I will avoid these daily 3 red candles. I will ride this stock, and my stop loss will be either on daily chart 20-day moving average or 50-day moving average. If my risk appetite is large enough, I will trail this with 50-day moving average, or if my risk appetite is not large enough, I will trail this with 20-day moving average. So on the day of this stock breaking the 20-day moving average, I will exit from this stock. So I entered on 20th in this candle. Highest price was 305, and I am exiting at 306. So no profit, no loss. Or at the end of the day, the price was 309. So as per this, you can define your strategies. So again, moving back to presentation, I hope uh, you are enjoying the presentation, not getting bored. Yeah, yes, no. Place in comment box, and moderator, please let me know the result. What what is the general public is saying? So this strategy I have shared with you. ये strategy क्यों बनाई थी? These are the result of this strategy. While discussing on Twitter Spaces, one of my friend has given an idea for his ultra long term. That idea was for ultra long term investors. He was talking about monthly 7 moving average. When it crosses over monthly 20 moving average on monthly chart, go and enter in that stock and keep trailing it until that stock doesn't break down to 20 monthly moving average. So basically that was the idea. From there I picked the strategy, built the strategy, tested this strategy, and during the testing period of say 4 5 months, we will we were picked 13 stocks from this strategy and last updated this strategy on 16th August. So out of these 13 stocks, the average profit was 11%, which is more than our inflation rate. See, there was in those period the market was sluggish and going down. Thereafter, market has peaked and again now it is in a sideways mode. Where we have exited one on three red candle. Second, this is another part of the strategy. RSI has gone up on daily chart. It has crossed. This is suppose 70-day 70 line of RSI. If RSI gone up after crossing 75, if it is coming down and crossing down 70, at that time you can exit the stock if you are a positional or short term investor. So that was the strategy. And three red candle, we have discussed this is the exit reason. बहुत बार क्या हो जाता है, आदमी घुस तो जाता है स्टॉक में और उसका अभिमन्यु हो जाता है. Abhimanyu means he knows how to enter in it and he doesn't know exactly when to come out of that circle. See, Abhimanyu was knowing how to break 6 rounds of the Chakravyuh, but he was not knowing how to break the last seventh round, and uh, that was the end of his story. He was a great fighter. So in stock market, exit is very important. एंट्री कोई भी कर लेगा, प्रॉपर एग्जिट कहाँ करना है. प्रॉफिट कमा के घर पे भी तो लाना है, नहीं तो सारा प्रॉफिट मार्केट आपसे वापस से वसूल लेगा. सो in this slide I had given some rules of this strategy. Entry, weekly moving average 7 crossed over weekly moving average 20, which we have discussed all these parameters. Where should be your stop loss? Higher of 20-day moving average of the entry date or 10% from the entry price. Whichever is higher, that should be your stop loss. And when to exit, any one condition of this following, if that stock satisfied any one condition of the below 3, you have to exit. If RSI crossed over 75 and then coming down to 70, either partially book profit in that stock or fully exit based on your risk appetite. If there are three red candle अगर नीचे 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 बन रहे हैं, then exit from that stock or your stop loss, this stop loss which you have defined, if that triggers, then exit from that stock. If suppose after entering to that stock, if the price is going up, प्राइस ऊपर 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 जा रहा है, then use the trailing stop loss, may be shifted to 20-day moving average or 10-day moving average or even 7-day moving average as per your risk after stock crosses 20% of profit level, 20% up from your entry level. We have discussed this example, how to back test. This is the example given in the slide, power grid. Then this we have discussed just now. Thank God we have got time to explain the portfolio sizing and risk management. Everything is clear till now? Any questions? I'm getting some noise. Who is talking? Moderator, can you please mute all others? Okay. So now presentation is visible?
Yes, sir.
Yeah. So now this is very important part of the presentation. See, portfolio sizing and risk management. Who are you? Are you a positional trader? Are you short-term trader? Or are you a medium to long-term investor? Based on you can decide your portfolio sizing and risk management. See, suppose how to do this, divide your investable capital into 20 stock if you medium to long term investor then. So suppose your investable capital is 10 lakh rupees. Divide it by 20 stocks. Means it comes to 50,000 rupees for investing in each stock. Why this you have to do? If suppose you invested all the 10 lakh in one or two stocks and they were going down, suppose by 2% only, if suppose you invested 10 lakh in one share and that goes down 2%, what is the drawdown to your capital? 20,000 rupees. If you follow, if you manage the risk, if you divide your investable capital into 20 shares and if you take entry of 50,000 rupees in each individual security and you place your stop loss not more than 10% of entry price, so 50,000 ka 10%, that will come to 5,000 rupees for each share, which will in turn come to 0.5% of your total portfolio size. So if you enter into 20 stocks, that will be more beneficial for you because chances of drawdown will be less there. Then quickly exit if stop loss gets triggered. Always consider stop loss as your friend. Consider stop loss as your insurance premium to surviving in the market. Don't fight with the price. Bhav Bhagwan che, price is God. So always remember that before taking any entry, you should have your risk, defined risk in the place. So don't wait in hope and increase the losses. Quickly exit if stop loss is triggered. Treat yourself stop loss as your capital protector friend. Ride the winners without any price target. Many times, what happens if you suppose if someone suggests you this stock is very good, enter in this stock. Immediately, your friend will ask, "What is the price target?" कहां तक जाएगा, वो सिर्फ ऊपर कहां तक जाएगा वो पूछेगा. बट what is there? Basically, you have to define your risk, your stop loss here. Stop loss is in your hand. Whether the price is your hand, do you have that much of capital? Are you a high net worth individual who can manipulate the market? No. Then keep stop loss in your hand and don't think about the target. Let ride the winners without any price target. Trail them to the maximum possible level with your trailing stop loss. You can increase your trailing stop loss. Suppose your first stop loss is at this point, price gone up, you can increase your stop loss to this level. Price again gone up, you can increase this trailing stop loss to this level. Increase here, and if then price falling, either partially book here or fully book here. See, suppose you have entered here, then this is 10%, 20%, 30%, and 40%. You were price was going up, you were increasing your stop loss from your entry point to first 10%, then 20%, 30%, 40%. Price has gone up to suppose 55% or 60%. Then it was say 50, 55%. Then it was coming down. At least book partial profit at the 40% profit level. So this 40% of this profit will cater for stop loss of your other stocks. Suppose if your winning and losing ratio is 4 is to 6. So in 4 stocks, you are winning and your risk reward is 1 is to 4. So 40% you are getting here, 40% into 4 is equal to coming 160%, and you are losing maximum 10% in 6 stock based on your stop loss. So you are losing 60%. So again, in this risk reward, which is, one will say it is a not a favorable risk reward ratio, but if you check the total, 160% minus 60%, it come to 100%. So it is very important to ride the winners without any price target and uh, trail them to the maximum possible. Just I will show you one example. I will go to one chart, KPIT. KPIT technologies. Based on that strategy which we have discussed, 7-week moving average crossing 20-week moving average. If I go to the weekly chart, 120. Here I entered that stock. June, July. Yeah. The proper entry was here, but I entered near about this big candle in June. Okay. and from this ride it to this level. Partially profit booked at 813, 800, uh, near 850, 830, and then exited from here. Can we write this much? What I saw here, based on my technical parameters, there was a reversal pattern on daily and weekly chart here, and I entered in this in August. I entered, accumulated this stock from 539 to 531 and exited partially here near about 716 level 716. Then again that partial exit I covered here again near about 650 640 level. Yeah, so whatever quantity I sold here, near about 50% quantity, that again I accumulated here and I fully exited here. Total profit was more than 45% in this trade. Same way, JK Lakshmi Cement. So we have to learn how to ride our winners. Now the stock is going in a consolidation zone. You see here on daily chart, it is बॉक्स में अटक गया है. Whenever this box breaks on the downside on or on upside, I will again enter in this stock. So likewise you have to do based on your studies. That's why risk management is very important. We have discussed a few 40-60 win lose ratio. If with experience your winning ratio is 50 is to 50, then you can easily beat twice the inflation. If suppose you are not, uh, your risk appetite is not that much big, then also you can achieve this target. You have to study the technical and fundamental, and based on you have to take the decisions. What should be the risk management for day traders? Don't risk more than 5% capital in a single trade, and don't take more than two trades in a day. Instead of 5%, I will say 2%. Yeah, 5% capital, and risk should be keep SL of 1% only per trade. So यहाँ पे क्या होएगा? If suppose your capital is 10 lakh rupees, you are taking two trade with a total 10% capital. So you are investing 1 lakh capital. If suppose by bad luck, if stop loss of both the trades is triggered, so how much you were losing? How much you are losing? 2% of 2 lakh. 2% of 2 lakh, which is coming to 4,000 rupees only. So how much days you can survive in the market? 10 lakh, your total capital divided by 4,000 rupees means you can survive for 250 trading days. 250 ट्रेडिंग डे, आप अगर आप 250 डेज डे ट्रेडिंग डेज अगर मार्केट में सर्वाइव कर जाओगे ना, so you will learn lot of things, and by the experience you will learn and learn and learn, and your learning curve will go up and up and up. See, practice doesn't make man perfect. Practice make a man habitual. Only right type of practice Yeah, practice doesn't make a man successful. Only the right side of the practice will make you successful. Otherwise, it will make you habitual. So this is that, and then uh, these are some books. There are a lot of books you can read. See, Bollinger Band, John Bollinger, he has given a very good analysis of Bollinger Band. This is on moving averages, how to use the moving averages that it tells you. Darwin's box, the box which I has drawn, breaking the box, that was explained in this book. How to make money in the stock, William O'Neill, can slim technology, that is explained in this book. How to identify stock on um, EPS growth, sales growth, that is defined in that book that is given. Graham number, which we have discussed, Benjamin Graham. Then chapter 10 of this book is very much important. Trade like a stock market wizard. A picture is worth more than 100 words. So you can learn the chart reading, uh, secret of profiting in bull and bear market, when to sell, when to buy, that is given. पीटर लैंच, अरे ये तो बहुत 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 बढ़िया, जितना पढ़ोगे उतना इसमें डूबते जाओगे. एंड these are just a sample books. There is a saying in Marathi, वाचेल तो वाचेल. Those who will survive, who are readers. And in Hindi, we always say, पढ़ेगा इंडिया तो बढ़ेगा इंडिया. So apart from these, read books. Books will give you immense knowledge, बहुत knowledge मिलेगा. And your uh, this. Now coming to the last part, conclusion. First, do the fundamental analysis. Keep ready your stock list. Check technical parameters of those stocks. Take entry and exit based on technical analysis. We have learned how to identify the fundamental analysis, from which website we can get the list of those, and how to check the technical analysis, how to prepare the scanners. This was a sample. You can learn more and more and excel in your tradings. So the final conclusion is, high profitable bets are results of fundamental analysis coupled with technical analysis. If we put both these together, then वो जो बोलते हैं ना, सोने पे सुहागा, वो हो जाएगा. With this, I am ending my presentation. So now the forum is open for question and answers. Moderator, is there any question? See, I am not able to see the chat box. Moderator, are there any questions?
The chat box is not working here.
Okay. So
During the yesterday
anybody has
session,
any
it is
question,
not
then
working.
he can raise an hand. He can raise hand and ask the question. Moderator, please allow them. Is there any request?
I think moderator is not present here.
Oh, so
May I ask my question, sir?
yeah,
I'm Sumedha Naik from Sindhur district, Malwad. Sir, is there any website to provide the Graham number for the companies or the shares?
if you have uh, gone through this, we have discussed this query on screener.in. I shared this query.
Okay.
If you go here, I selected Graham number in this my ratios. Okay.
Okay, sir. And so one more question is there. What is
Yeah.
the standard pay ratio?
Peg ratio should be less than 1.
Okay. Thank you, sir.
Welcome. If there is no question, then we can end. This is bull and bear. Two individuals can still be friends even if there is a difference in opinion. If you are a trader, if you become a successful trader by experience, you can earn in both the market, in the upgoing market, in the uptrend and in the downtrend. If there is any question, please ask. Otherwise, we will end our session. So, yeah, good afternoon. Who is online? Yeah, yeah, that was discussed. That was discussed. Screener.com is one other also there. Peg ratio should be less than 1.
Those are the same questions asked by me, sir.
Okay. Yeah. Any other question in chat box? So, hope guys you have enjoyed the session and there will be some addition in your learning through this session. Wish you all the best, happy trading and profitable trading. Thank you very much from my side. Over to you, moderator. See, first of all, identify who you are. Are you a scalper, day trader, positional trader, or short term trader, or investor? Based on that, take the entry. And while taking the entry, first identify what is your risk appetite and what is the stop loss. So, stop loss is more important. Where to exit, that is more important than where to enter. So, guys, uh, focus on the risk management part more. Psychology part I have not covered in this because I was not sure whether I could cover all these slides within 2 hours or not. So I had not discussed much more on the indicators. You can find the discussion on indicators on YouTube on various channels. They had discussed RSI, MACD. Don't go and calculate the RSI in Excel. Yeah, that is not useful. Just understand what is the RSI, what is the MACD, what is the Bollinger Band, and how they are useful. The more and more indicators you use, you will lose focus on from your strategies and your risk appetite. So, so I would like to ask you whether the recording will be available. Yeah. Okay. Thank you very much. And guys, if you have any question, you can send it through the moderator to me, or I had shared my Twitter handle. You can post queries on my Twitter handle, but don't post any stock specific query. Yeah. Thank you very much. Thank you. Okay. Thank you. Shall we end now? Okay. Thank you. Bye.